Hey guys, what's up? My name is Aditya Kumar and I am the CSPreneur. Welcome back. This is our first ever episode of investment. So in this series, we're going to be talking about, range of things from fundamental investing to, methods and vehicles of how you can make more money. After all, who doesn't like a bit of money on the side? We're also going to be covering how to make a passive income, so stay tuned for that. So in today's episode, we're going to be talking about how to read a candlestick chart. Now you guys might be wondering, how does a candlestick relate to investment? Candlestick charts are some of the most basic things that an investor needs to know. A candlestick chart is a type of price chart. It displays the highs, lows, opening, and closing prices all in the same chart. Now check out this diagram I put up on the screen behind me. This diagram shows what exactly is positioned where along the chart. So what is the opening and closing prices, you might ask? The opening price in that set time interval of that candlestick chart, which is variable, the opening price, regardless of whether it's above or below, the opening or closing price above is actually the price at which that stock unit started at. So let's say I'm investing in Amazon and the opening price is set at $2,375. So then we would see either an above or below chart of $2,375. However, let's say that stock dipped. Let's say it went down to $2,200. In that case, that candlestick would actually be colored red because the stock dropped in price. So in that case, the upper bound of that you can think of as the opening price, which is $2,375, and the lower bound is $2,200. So you can also see a little bit of a wire string coming out. And so that is actually the extremes that that stock jumped in that set time period. So let's say I'm viewing a 5-minute, 5-day chart. So in that period of 5 minutes, let's say Amazon touched 2,400. So that's the upper bound. That's the extreme upper bound. Because the opening price was set at 2,375, we can also see a little string coming up from that to 2,400. So 2,400 is the very, very highest price that stock touched in that 5-minute time interval. Now, alternatively, you can also have lower prices than where that stock closed. So let's say that the stock dipped to $2,000. So in that case, you would actually see a wire from $2,200 down all the way to $2,000. And so this is why candlesticks can give you a lot of information in just a very, very simple and easy to look at graph. So a little more on the candlestick chart and what it does. You can also use patterns with candlestick charts, and we'll be discussing this later on in the series. In fact, the very next episode is 6 bullish trading patterns to identify. Candlestick charts can also have variable time intervals. So you remember when I said 5-minute, 5-day chart? That means that the entire chart is 5 days long and you have multiple candlesticks in that time period. In your screen, you're looking at a time period of 5 days, and in that you have several candlesticks. And so each candlestick width essentially represents a certain time interval. In this case, it's 5 minutes, and you can set that based on what you want to really be looking at. And so we'll probably jump into the Ameritrade's Thinkorswim platform, and that's when this will really start honing in and you really want to have a rigid understanding of what a candlestick chart is. But that's it for this video, and I'll see you in the next video where we're going to be identifying 6 candlestick patterns to look for in a bullish market. See you then.